Good morning. Greg here. Finally. Good to be back, everybody. So, hello to our friends there on YouTube. Sorry, we weren't there for a while, but I was away on holiday in Europe and the internet connection wasn't the best, so didn't give it a try to try and do the YouTube thing, and probably the whole thing would have broken down. But anyways, let's get rolling here. Should have sound there on YouTube. Hold on a second, guys. Make sure nothing's muted here. Yes, yes, no. All right, I'm gonna have to go with the flow here. So, good morning to everybody in the green room. And so we all know what's happened here last week. You know, last I spoke here, I had spoke about the potential for a bear trap, and that certainly came to fruition on that gap down last week. And then the reversal back up. There was the China phase one deal, and then followed by the gap down. When we look at the spiders, the gap down under. Well, let's just go to that since I'm talking about it. We can come back to the futures just to see what the pattern. A gap down under an expanding range breakout bar to new highs. It doesn't get that much more bearish on a gap. I guess it, well, in a sense it does. It gapped down onto some support, and prices actually held there versus gapping down under whatever congestion there was. And buyers stepped up again. It's like, who cares? Kill whoever you want. You know, this is a bull market. It's in an uptrend. You know, it's another buying opportunity. Maybe so. But as we reviewed really on this high day here, it was a Friday, that our market internals gave us a heads up warning. There's risk for longs here. And as I said at that time was, look, while this is the signal that we've gotten, it's unusual it would be unusual historically for the markets to start giving it up immediately. But they did, which was a bit of a surprise. And then, of course, you know what happened. It got the gap down. It was a little bit too much, too fast. And it got, you know, that was the bear trap, and it rallied and higher. And so now what we've got here is uncertainty, right? You're saying, no kidding, Greg. Sure. Well, one of the things as we look at price patterns is to recognize pictures of certainty in an uptrend. And what does that look like? It looks like an arrangement of price bars or candles that are relatively equal in range, that do not overlap that much, have few tails. And you see that what was happening here as prices were advancing. What I wrote in the letter was, hey, this is in an uptrend and it looks great, but maybe, you know, it's a little bit too much or complacency. And then we got the internals on that gap up day saying, hey, be careful here. And while it's still in an uptrend, we can see that, you know, the gap up and the gap down, and now has created this trading range that's going on here. So the question to us as intraday traders is, well, does it recover, repair the damage, so to speak, and clear the top of the range, or does it break down through the bottom of the range here? And we can see, you know, it gapped down today as prices started trading overnight, and they recovered a bit, and they're just chopping around here. So this level is going to be our, well, somewhat of an important level here. That would open up the door to some probably nice shorting opportunities into the gap fill down here, and possibly even lower, which would make sense as we go to the higher time frame and look at what does that suggest to us. Well, it's had a heck of a run, right? From the October low, when the internals gave us a long buy signal at that time, and then when they eventually gave us the sell up here, you know, that was about a 15% run or so, and now momentum is stalled. Okay, it's still in a great uptrend. Momentum stalls within an uptrend, of course. But when we see that little doji bar with tails, the uncertainty displayed by that, well, the question is now, from this time frame point of view, what's our first reference point of support? Prior bar's low, weekly chart. Does it break that prior bar's low and close below it? So that's what we're going to see this week based on the weekly time frames. And if it does that, of course, that's suggesting it continues to move lower. And it does make sense for it to continue to move lower with our internals, where they're at. And for, views that have not seen it in the advisory letter or back then when I posted it in Telegram and in here, right, this was where we got the extreme in sentiment and breadth. And now we're just working that off. Now, as we look at this, recognize that there's gas in the tank, is a way to put it, before prices could get down to the bullish level. Now, one of the things I'll point out is that in a bull market, as this can chop sideways around here. So we're starting to get the price confirmation. Right? When I said here was, look, I'd be surprised to see this just collapse from here. Historically, that just isn't the way it happens. But it certainly looked like it was going to do that until it got gapped down. And now we've got this chopping. And now, of course, traders are like, what's the next shoe to drop here with this Iran thing? Are they going to attack? If you read what they said after their general was killed, they didn't say, we're going to come kill you. Right? Immediately, we said, we're going to take an approach of planning this out. And so, of course, they're not telling us what they're going to do, but hey, terrorism, cyber attacks, who knows what, right? And, we'll just have to see, and that creates uncertainty. So, we really have to adhere to your trading plan as you always should, but certainly don't rationalize anything and, get into some financial difficulties, to say the least. So we mark off our reference points. So we got a high reference point. We got a first low reference points. We've got a void below. And of course, we got a void above. But right now, buyers or sellers have to take control within this area right here. The weekly is suggesting that at the best, some sideways chop for a period of time. That is a correction. And it's also a correction for prices to retrace lower. And so when we say lower to where, well, this little congestion area down here would be an obvious support point. And our job as technical traders is to mark off our reference points in multiple time frames and then trade them accordingly. Right? That's what guides our bias. Trends in multiple time frames, which so far they're still bullish. Right? They're just chopping around here regardless of what's happening, out in the world. That sounds kind of ominous. Right now, everything's bullish. And if we were just trading from a cave somewhere where we had no access other than our charts, we'd say, well, something's going on here, but it makes sense for something to be going on based on our tools, that the momentum would be slowing down, yet the trends are still up. So from a swing trading point of view, just trading these particular charts would say, let's sit on our hands here for a while and see how this all unfolds until we get a clearer pattern to tell us what to do. Now, we then go and we look at other markets, right? As well as we would go look at other stocks to see, hey, just because these markets are uncertain about what's going on here, maybe we're going to find individual stocks that are on their own page. And that is the advantage of being a stock equity trader versus someone that says, hey, you know what? And I did this for many years, to say, all I'm going to trade are these futures contracts. And that was all well and good, at the time. And then they started to the ranges just began to contract so much that it became too difficult to do it. And back to stock trading. So look, there's no one great instrument to trade. So having flexibility, which is what Master Trader Method provides you. You can trade ags, you can trade gold, you can trade stocks, you could trade whatever. So if one instrument becomes, kind of dead in the water, so to speak, you move on to another. So the same story in the Qs here, same analysis, mark your levels, diamonds, similar, right? Trading range going on here, slowing momentum, right? There was the big wide range bar, gap up and wide range bar and a gap down. It's like, so we're in our cave, we're saying, what the hell is going on here, right? Let's just stay away from this for a little while and see what plays out. Now, intraday, that's another story. But from these time frames, they're saying sit on the sidelines for a time being and let things settle down. The Russell, which was leading the way higher up into its void, the weekly still looks okay. It's starting to pull back. You see the big gap down from last week. So range expansion, overlapping bars and tails, pictures of uncertainty. And you can see the chop on the hourly chart. That's in a downtrend, not in a sideways trend. It hit some support here and began to hold. And okay, we'll get to SPX. Transports, they came back pretty good from that gap down. So they've been the laggard. So they maybe begin to show a little bit of relative strength, and that would be a good thing. If these don't break down and actually can hold up here. So, but still, just a picture of sit on the sidelines, wait and see what's going to happen. You've got our levels, and we wait and see. Now, SPX levels for 0 days to expiration. And so we've got the same thing, of course. We've got our support and resistance levels, same trading range as what we looked at on spiders. Of course, it has to be. So it's in the middle of the range here. Let's see. I mean, we really don't get a good idea because they don't give us information here as pre-market. So again, going back to spiders, and we'll look at the futures, kind of just neutral, right? 320. What is that? After the gap down, 320.95-ish. So what I would I would wait, of course, for the open, let it trade for a little while, and we look for, right, a tell, right? What we're going to be talking about in MT Live on Wednesday, a tell. What would a tell be? Well, it's close to support down here. So let's just kind of give it a little bit of a range. And let's just say somewhere in here. Let's say it pokes down here at the open and springs right back up again. All right, now look for put spreads. You think, well, the call spread would be the no-brainer. I guess it would be initially, but that far away, is there any premium? And so then you got to assess that to see if there is. But I would give it maybe 5 or 15 minutes here at the open to see what kind of tells there are as to any kind of breakdown failures or breakout failures. Gather a little bit more information before making a decision there. Okay, we're doing good on time. So we get a different picture when we look at the futures, since they're trading overnight. And so there was the breakout, big engulfing bar drop. And right now, traders are like, we don't know what's going on here. Let's just wait and see what's going to go on. Here's your signal overnight where it pops up and you get this breakout failure and down it goes, and then buyers step up again. So why do they step up? Well, everything that we look at is based on real price action. And you look to the left and you see, oh, there's a prior low over there. Will it hold? And then you start looking at the current price action to see, do you get some information to suggest that it could bounce back up? Oh, yes. Bounce up to where? Well, up into this area. Can it make it? So this kind of price action right here, that's bullish price action. After it ran up, buyers step up on the dip, so on and so forth. And now it appears to be over. So a lot of chop going on here, and it just makes a whole lot of sense that institutions and traders are going to want to gather a little bit more information, right? whatever news is coming out and so on. But technically, what looks to us is that this weekly chart with the internals is supportive of a bit of a retracement here within a bullish uptrend. So when it gets down to a level on the weekly chart that makes sense, the return of price structure, if you will return that provides pictures of certainty. So that'll take some time to do. And Qs, similar pattern there. Here's our support, right? So as you can see, we just, after explaining what I have and start looking at other markets, it just becomes what we call factory work, right? Of marking levels, looking at patterns, looking at multiple time frames. Dow futures down almost 180, right? But holding this prior low in the 20 MA. There's our trading range. And it's kind of a breakout failure there. And there's the prior low. And so now we're just going to wait and see here as things consolidate a little bit more, whether they will move up or down. And probably just looking at things the way they are right here, even from a intraday trading point of view, this would not be my first go-to. Probably ES or NQs having a little bit more of a void, but there may be better opportunities in stocks versus over here, but we'll assess that as it unfolds. And the Russell, which really did look like it could get up. We looked at the ETF back up to the top of that range. Well, that's certainly in question now for the short term. And so this looks like it can continue to move lower as everything else, but we'll see which way it breaks. Oil continuing to push up with the uncertainty about oil supplies, which there's the logic to trading. It's like, Middle East, the controversy going on there, wars, possibly, limited oil supply, so on and so forth. You look at the chart and say, oh, it's at the top of the range here. And I got to be an idiot to be buying crude oil at the top of a trading range. So news aside, right? Technically, it doesn't make sense to be buying crude oil here. It's already had a nice run, wide range bar. Now it's beginning to stall. All right, stay away. Bonds, right? Technically, it made sense, coming down here to support. And you got to watch out for these kind of wide range bars that come into a prior pivot low here, right? PL pivot low support. Where that's why we look for 1, 2, 3 or 1, 2, 3, 4 continuation patterns after a wide range bar. That shows us that prices cannot bounce up from what would be short-term extended intraday, and then we look for it to go lower. So as this news unfolded, traders ran to bonds out of equities. And so this is a pattern that suggests it could continue to move up, which kind of opens up the door, which I wrote in the letter, to a little bit of concerns, not immediately, but you want to keep an eye on interest rates to see how far they come down. Right? You remember all the talk about inverted yield curves. Well, we're nowhere near that anymore. It was inverted for a little while, but we survived that. And 3-month interest rates or yields actually move down as well. But if you should see this start perking up while these are moving lower, just keep it in mind. It's something that moves slow, but you want to keep that in mind. Gold, right? Soaring, right? And Dan, we nailed that on the GDX with that buy set up above the red bar, which was right near the low. It was like above this bar's high, and that was just based on this whole consolidation that I was talking about forever, that looking for this to turn, and it went on and on and on. And at the time, it certainly looked like it was going to go lower with a 1, 2, 3 and a 1, 2, 3, 4 to the downside. And it didn't. And that's what it was supposed to do based on the big bullish monthly time frame. So that looks like it can continue to go higher. And well, silver just took off as well, right? Which it typically does. And these look like they can continue to go higher. Short term, right? Maybe they need a little bit of a rest, but now you've got the daily charts in alignment with the monthly charts and, you know, the weekly charts. And that's a good thing when you've got 3 time frames for swing trading and intermediate term holds that are aligned that way, would avoid above, and that suggests they can continue to go higher. And all yours, Dan. Good to be back, everybody.
All right, thank you. Yep, welcome back.
You're so funny, Alex.
Nice, Alex. Yeah, we had fun. All right. Opens, yeah, we have a couple things gapping against us, but no disasters. And remember, I don't think I gave a put spread on deck into the close on the 15-minute breakout. But everything else, I don't think I gave one single long. We were looking at military stocks, and I wish I gave that XAR. You know, I mentioned it. I mentioned XAR, and I sent an alert. Like right here, I said I was looking for a pullback on the 15-minute chart. And then it went over lunchtime. All right, so coup, we have a put spread, workday. So some of these are gapping down, but no real disasters. It's just sitting through it for now. RTN, we have a covered call. That was a beautiful trade. I said G down a little bit. But you know, we got way out of the money put spreads. So let's look at gappers and new plays, and then if we have time, I'll come back to opens. Boeing here. Oh, and we were selling some 0 DTE put spreads on Friday. And remember I said Boeing would have been a candidate for a 1 or 0 DTE. But I said over and over again, I don't trust this pattern to go out 7 days. And now it's, you know, gapping down again. It's been the drag. I think Alex said Boeing was in ITA, but not XAR. XAR, that was beautiful. Neo. Little gapper here. Nice 15-minute chart. If you just overlay this 15-minute chart over, you know, the broader markets, this is relative strength. And the weekly and monthly have room, so that's on my gap list. AXSM down to like 91. Maybe 30-minute low, that could be a day trade. Bingo. Very sloppy here, but getting a nice little gap. I got some other lower priced ones here better. Look at Rada. It's I think it's a biotech. But look at, you know, slop trading range. But this is looks like our possible event. It's a gap breakout. And look at the monthly. You know, that's a bullish monthly right there. Target, it's had some of a transfer of supply over time. So I'd say target could be $7. Let's just see what it does on, you know, within the first hour. Look at this plug, 345, so it's gapping right here. It's a deep retracement on the weekly, but it's a buy setup, bottoming tail at the 20. Let's see what the month looks like. Wow. Debbie, this No, I'm not going to call this a 10 bagger, but you know, could be a double. Could be a double. Keep an eye on that. F cell was my 10 bagger idea. But then it got sloppy on Thursday. COHR, what are you doing? I don't know what COHR is doing. Calm had earnings, 38 bucks, gapping way down here. No pattern. Life, 7.4. Wow, that's a big gap. Must be a bio. Yeah, with that symbol too. LIFE, but that's a bullish pre-market chart. I would have preferred that, you know, if I had this same bar to like $6 and then I had a buy setup, that's just too extended for me. CMC 23.90. It's a very bullish gap. It's a, you know, gap breakout, but that's a big gap, and I don't know about the target. Qs, diamonds still basing at the low here. Honeywell, I know some of you guys are in that. SDC, here's another one that I'm watching. A recent IPO. Look, if you ask me Friday, is this bottoming? I would say, I don't know. I need an event. It's just consolidating, but it did make a higher high than this, and the 20 MA starting to flatten. But now it's a gap breakout. Target, first target, you know, high nines. So that's on my gap list. Saba, it's gapping, you know, you missed your ideal entry on that. Len got positive article in Barron's. And I was looking at this to sell a put spread on, it's kind of a W bottom, but it has earnings this week. DBN, some of these oil stocks, I like the weeklies are extended, but I like the monthlies on a lot of oil. In fact, I put slob in our advisory letter as a core. You know, look at that, 120 down to low 30s. So this made a new low, this made a new low. Now it's a deep retracement. First target here, probably go sideways for another couple of months or retrace. And then second target, 55. So if, you know, if the war scenario picks up, then yeah, we need to be hunting with oil. Shack, it was mentioned in Barron's, which has made me look at it. But it's a put spread idea over Thursday's high. See it bouncing around here pre-market, but you know, it looks like it's flat. So anything, yep, Qs, things are making new lows right now, 2 minutes into the open. Yeah, Grub was mentioned in that little article, but there's no pattern there, Debbie. It's a bearish 1, 2, 3 sell setup on the weekly. Yeah, I wouldn't mess with that. UTX, I loved it on Thursday. Friday, I'm glad I didn't trigger it, but it's still worth watching. Daily, weekly, monthly. And then anything like this that negated the gap, you can see with the tail, obviously, it exceeded. It not only negated the gap, but it kept going more. So let them, you know, we're in no rush. U-Haul had positive mention in Barron's. I'll look at that for a put spread candidate. XLI also beautiful breakout Thursday, similar to UTX. Gap down, and you know, this one didn't exceed the high, but came pretty darn close. So over Thursday's high, that's an idea. XLY, whiskey, nothing. These are leftovers now. Workday, I said over Friday's high would be, you can add on the put spread. Charter, we had a covered call that we let get assigned at 490, but it's still strong. You know, again, think of what the market did. This gap down negated it and closed to new highs. That's strength right there. All right, glancing at the opens. Now, Facebook, we have a put spread, which I don't like the action so far, but it's under this pivot. Adobe call spread. Wow, that thing's been strong. OAS, yeah, it's breaking out. That was a nice 1, 2, 3 right there. I love 1, 2, 3s that where you have the gap down negated, and then it's either a closing breakout or, you know, bullish close. AJRD out. Yeah, it had a good 3-day run and then a gap.